Okay. Hey guys, Jeff Ingram here. I'm one of the co-founders of the Ingram Mortgage team. We're a team of five, head office located in Cloverdale, BC here. Been in the business for 11 years myself. My partner is my father, Mark. He's been in the business for over 40 years. So kind of seen all the highs and lows throughout his career. And I've now seen a couple of them starting in 08, 09, and now starting to see a second financial crisis here. So it's kind of interesting to reflect on what happened when I first started, and now kind of use that knowledge and that history and from everything that I remember back then to parlay it to my customers today.
Yeah, thanks for coming on. I'm sure people have like quite a few questions around what's happening today and their mortgage and refining or you know the interest rate seems to be going down. I think it went down again today because it's March 27th, and they put it down to a quarter point.
Yeah.
How's that reflecting right now in the world of mortgages?
Well, it's definitely making things a little busier. I thought I was going to have a fairly casual Friday today, and but I actually woke up to a number of different voicemails and text messages. It's funny nowadays. I actually find out about these rate cuts from my clients before I even had a chance to log onto my computer and see for myself what's going on. So that's just how connected everyone is now. But yeah, I mean, what we saw, kind of the cause and effect of everything that went on is we saw the markets tank essentially with the COVID crisis that's been going on. That drove the bond market down as well. The bond market is what fixed rates in Canada are priced on. And so we saw fixed rates come down to, levels in the very low twos, sometimes even the high ones in a couple special circumstances. And those are rates that we've never ever seen before. Um, and so we saw those, they were around for only about a week or a week and a half. So it's a very short period of time because what happened after that is the Bank of Canada announced two cuts to their overnight rate. And after that second cut is when the banks kind of started tightening up and going, hold on a second here. We need to kind of start building in a bit of a buffer and a cushion because we foresee some tighter times ahead. And so at the same time as that too, the government announced their first stimulus package. And so that stimulus package actually pushed some upward pressure on the bond market again. And at the same time, like I said, the banks are building in a bit of a buffer. So we actually saw the fixed rates jump all the way back up to levels that they were at previous to any of this even beginning. Like as of today, fixed rates are at the high twos, low threes again. And so this is all inside a 2 week period. So it was just an absolute roller coaster for the last 2 weeks. With the prime rate getting knocked down, that of course benefits anyone who's already holding variable rate mortgages or home equity lines of credit. So they will see their interest rates dropping accordingly. For any new customers, however, the banks have taken away their discounts on the variable rate mortgages. So because prime was dropping so much, they took away all their discounts. To give you an example, on average, you used to be able to get roughly 80 basis points below whatever the prime rate was at. Now most lenders are at even prime, if not a little bit higher. So a lot of them are now priced at like prime plus zero point 0.2. So they've
Just
essentially,
just to clarify, if you already had a mortgage before that, though, you're so like if it was like prime minus X, you still have that today, though.
exactly, you still have your discounts. Your discount is what remains constant. So anyone who's in a variable rate mortgage previous to this, which luckily 90% of our database is, they're reaping the rewards right now.
Have you seen a lot of people kind of looking to try to pull the trigger on locking in? Are people feeling kind of like the pinch of kind of what's happening and saying, well, how much lower is it really going to get?
Yeah.
Because I mean, it's interesting that you say that the majority of your clients are variable because people usually shy away from variable on average. So obviously, you're educating people a bit more on those things.
Yeah, for sure. People often shy away from the variable because they don't do a ton of research behind it, to be honest. And that is where we step in. Like, if you look at history over the past 50 plus years, anyone who's taken a variable rate long term has the other thing the variable rate offers is a lot of flexibility, and so that's the main reason why I'm not suggesting anyone to lock in right now. The fixed rate market is far more volatile than the variable rate market is right now. Um, and so I'm just very hesitant to lock in and commit to something that, or during times of such uncertainty. And so I think what you're going to see here is a lot of opportunity for those clients who are in variable rate mortgages, because prime has dropped as of this morning a point and a half. So if the bank passes on that full discount again this morning, which they have during the past two drops, those variable rate clients are going to see their interest rates drop by 1.5 percentage points. That's a big win. And if we look back to the last financial crisis in 08, 09, again, the Bank of Canada dropped the overnight lending rate, to levels that we hadn't seen before, and they do that to help stimulate the economy. Well, once we started to come out on the other side of that and things started to recover, it took a very long time for them to start increasing the prime rate again. I mean, the prime rate didn't really start increasing till late 2017. So, I based on the amount of money that the government is pumping into the economy right now, again, I think that those people who are patient with the variable rate, they will have an opportunity to enjoy a fairly low interest rate for a decent period of time without having to worry about it skyrocketing up. When the economy does start to turn, the government will likely start going about things and increasing things slowly as to not trigger negative effects on the economy again, right? So I guess what I'm saying is I think there's less variability in variable rate mortgages right now than people might be led to believe.
Right, right. And yeah, with the bump down, obviously, like there's some savings to be had here.
Yeah,
Um, in terms of people qualifying for mortgages, or even like, some people I've talked to said, you should probably, if you have a ton of home equity, like try to get like a home equity loan, not to use it up right away, but if you have enough equity in your house, it's like it might make sense to get access to that, if you do think that your job is potentially at risk.
yeah,
Like how would you help people navigate that, or like what are your thoughts on that?
yeah, for sure. So for anyone whose jobs might potentially be at risk, there's a few different things that are going on right now. Number one, the most popular thing that's in the news right now is the mortgage payment deferral options, and I'm sure you're going to get to that eventually. But that's essentially the government and the banks have partnered up in saying that they're going to offer clients an opportunity to defer their mortgage payments for up to 6 months. So that's the most popular um, point of relief that's being given to these customers right now. That's really for those people who, both income earners in the family have been laid off, and at desperate times call for desperate measures type thing. For those who maybe only one of the spouses have been laid off, and there's still one income coming in, deferring their mortgage isn't quite necessary. There's some other things that we can look at, using the equity in their home. We can free up some cash flow for them by restructuring things. We can consolidate some of that, high interest consumer debt that a lot of people carry these days. And so we can consolidate that into the mortgage at a much lower interest rate, and free up their cash flow. I mean, when we run those scenarios for people, if they have, some credit debt, or a big car loan or something like that, lots of times we're freeing up their monthly cash flow by, north of $700 a month, which is huge for people entering uncertain times like we're seeing right now. So to be able to give someone that option of hey, like, let's look at your cash flow situation and see what we can do, and you don't have to defer your mortgage payments. A lot of people are really liking that option, of course.
Yeah, absolutely. What about like people say, like, for example, like real estate investors that have renters, and the renters can't afford anything. I heard that there's like a couple of programs there, but I mean, does it make sense to defer your mortgage in if you're in that kind of situation where like you have a mortgage but your renter isn't paying, therefore, you have to like go out of pocket? Because I mean, not everybody has, 5 or 10 properties. Some people save really hard and get one, right?
Yeah. Yeah, that's a really good point, and we're actually still waiting for clarification on that, because for the mortgage deferral options to this point, what we've heard is that they're being offered to people who have been laid off from their jobs and who, um, need help making those payments and whatnot. But we haven't heard of any situations yet where someone who hasn't been laid off from their job, they still have an income coming in, but they have a rental property with a tenant who can't pay the rent right now. And so we haven't seen any of those ones be approved yet. So we're still waiting on some clarification on that. But I would imagine that the banks are right now, they're doing everything they can to help people out. So I would imagine that would be a pretty good case to for them to have a look at, and it should be a pretty good case for them to approve that scenario. um, I also have heard that the BC government just the other day announced that um, they are putting a hold on evictions to tenants and landlords. So landlords can no longer evict their tenants for the time being. So if they're doing that to protect the renters, then on the flip side, they're going to have to do something to protect the landlords as well.
Well, and beyond that, I mean, I was asking a couple of questions of like a realtor, and he said an hour before the government said like, well, you cannot evict anyone. He's like a friend of his served a renter eviction notice. Well, I don't know if that's the right term, but so like a house sold, and they're like, okay, you need to leave because like the new buyer's taking occupancy. And an hour later, it's like, hey, you can't evict anyone. And now they're like, well, what do we do?
Yeah,
Right?
I've been following a lot of real estate forums as well, and seeing those kind of questions being asked. I know the real estate industry is still waiting on some clarification around that too, because typically, if you are selling a rental property, you are required to serve a notice to vacate essentially to those tenants, and they have to leave because the property is being sold. Well, if they can no longer give those clients a notice to vacate, I'm not sure what's going to happen, because that would obviously collapse the deal. If a family's planning on moving into that home that they're buying, they're not going to move in with those renters.
Well, I mean, and that's the dangerous thing. Like, I mean, a huge chunk of government tax revenue is like, property transfer taxes, it's anything to do with homes and building, especially in BC. So it really does kind of beg the question, like, well, where are we going with this? Because, I mean, I get it from both ends. Like, imagine you just got laid off and you get served this notice to like vacate, and no one is going to rent you anything because you don't have a job, right?
Yeah.
It's like you're applying to somewhere. It's like, what's your job? It's like, I'm unemployed, right?
Yeah.
Like, as much as we can say we can't, people are like, the government would say, well, you can't discriminate against somebody because they don't have a job. It's like, yeah, but like there's a million and one reasons to just not give somebody something, right?
For sure.
So it's like, so what does that person do on one hand? But on the other hand, it's like, are you really going to have deals collapsing because of this? And I think the answer is yes, right?
Yeah.
So
Yeah. No,
it's not an easy thing.
no, it's really not. And yeah, are they going to collapse, or are they going to, is completions just going to be pushed out on those? I'm not sure. That is one heck of a juggling act that they have in front of them, and it's going to be interesting to see how it plays out. To be honest, I think at the end of the day, like I think the governments have done a pretty good job of stepping in to offer as much relief as they can to all different sides of or both sides of the fence, and all different people in different scenarios and situations, right? And so I think there's a lot of empathy being given, and so I'm just optimistic and hopeful that they will come to a resolution that will please both sides in this case.
Have renewals been affected in any way, shape, or form at this point, or is it just mainly like questions about the situation?
So you're talking like individuals who are coming up to the end of their mortgage term and they have to renew.
Yeah, and what are some considerations, like if your renewals in the next, like, 2 to 6 months, like what are some good things to at least keep your eye on, if not know? Because I mean, I know the situation is changing a lot day by day.
Yeah, for sure. So for the most part, lenders who are offering renewal options to their customers who have been good customers and made all their payments on time and everything, usually it's no questions asked type thing, like here's your renewal options, sign here. They never ask for an updated credit report, or very rarely I should say do they ask for updated credit report or income details, unless they're making material changes to their mortgage, i.e. Refinancing and accessing their equity. Then it's a full new application. Um, what it does affect though is, it affects someone like myself having the ability to shop that mortgage around for that customer. So if we have past clients who are up for renewal in the next couple of months and we want to shop that around to a new lender and see what other options are out there, if they're currently laid off, that's a new application to a lender, and that customer is currently jobless. So those applications just aren't going to be approved until they have their jobs back. So it would affect us from being able to shop the market, but in most cases, clients will still have pretty good options to renew with their current lender.
Okay. Yeah, I mean mixed news there, but I mean overall good.
Yeah.
However, I mean, I obviously people that are getting unemployed by the day here. I think I saw the last figure I saw, like 1 million people applied for like employment insurance. So I was like, okay, well, that's like a stark number
Totally.
in terms of like real in terms of the real unemployment rate, right? So,
Yeah.
I mean, hopefully we can turn that around, because I mean, if that number hits too high, there's considerations of property values.
Yeah, definitely. Um, it's going to be interesting. It's an ever evolving situation. Every morning I wake up and there's new announcements that lenders are making and new policies that are being changed or adjusted. So I think the situation is just going to continue to evolve. The resounding kind of theme that I am, hearing from most lenders is, they don't want to screw anyone around, and because at the same time it puts them in a tough position as well. So they're going to do whatever they can to work with their customers and new customers. Most lenders who are receiving applications and they are approving them and accepting their income conditions because they're currently employed at the time. Most of them are now saying even if they get laid off after they've been approved, but before they fund the deal, most of them are saying that they'll still fund the deal, kind of like, don't tell us information we don't want to hear type of thing. So, which is good. There are a handful, however, who are doing final verbal calls and clarifications with the employer just before funding. And that really, that screws the customer, screws the real estate transaction up, it screws everything. So, so far, those lenders who are doing those things are fewer and further between. The majority of them are funding based on their commitment, which is good. But again, it changes every day, and you just never know what's going to be announced, tomorrow morning type thing.
Are the lenders that are actually doing the confirmations, I assume that they're smaller lenders rather than the like big five?
So the big five, actually, only some of them have fully announced what they're doing. A few of them have announced their plans for insured high ratio mortgages, but they're still kind of yet to be determined on how they're going to be treating conventional mortgages. So again, we're waiting to hear from them. And some of the ones who are doing the verbals before, right before funding, they're big players. They're not small cats by any means. So I'm not going to name them on here, but it is interesting to see how that's evolving.
Yeah, I mean, like I was on an extended call with like a couple bankers in the last couple of days, and they're like, banks are in a strong position
Yeah.
to help right now. And as far as people internally have seen, it's like they're saying it's like they're really going out of their way to help people as much as they can,
Yeah.
as long as it's not putting like the whole system at risk, right?
Yeah.
So it's good to see. Any predictions from yourself in terms of like what the mortgage and or like investment side is going to look like on the other side? And obviously, we won't hold you to it because it's going to be an interesting journey.
Yeah, for sure. I mean, just based on what we've seen in the past, again, I do really believe in the variable rates right now. Even still, like new customers right now, like we're still suggesting variable rates if we can, because I think there's less volatility on the variable rate side than there is on the fixed rate side. So we're going to see some opportunities come out on the other end of this. You know, once the market stabilizes and everything, the lenders won't have to build in as much of a buffer on their fixed rates as they are right now. So you could see fixed rates come back down to where they were, you know, in the mid twos type thing. That's, I don't think that's a far fetched theory at this point. So, you know, obviously being in a variable rate, you have the opportunity to convert and lock into a fixed rate at any time free of charge. So again, just keeping your options open on that side of things, I think is going to be really big because again, you just never know what's going to happen. I do believe there's going to be some opportunities with interest rates in you know, on the other end of this, and also on the investment side of things too, not only in real estate but in the markets. I don't think we've seen the bottom of the markets yet. I know they've had a bit of a run here the past 3 days, but I believe that is mostly because of the stimulus that is being announced, and also the president south of the border is hoping for an opening on Easter, which man, that would blow my mind if that happens. I don't think there's
He
any.
might do it.
What's that?
I he might do it. I mean, he sometimes he puts his mind to something and he does it. So
Yeah, yeah,
we'll see, I guess, right? I mean,
yeah.
he's laying down a challenge, I think, and I don't know if that's a good or bad thing, to be quite honest with you. Like,
I think it's dangerous. I mean, they have more
well,
cases.
I think that's an indisputable point. It is, but I
Yeah.
mean, we've seen other things that raise eyebrows.
That's true. Yeah, it definitely will be interesting, but I know a lot of people are banking on that. I just don't see how it's possible right now. Because I mean, if you, I think I read somewhere yesterday that, you know, 17 days ago, the state of Louisiana had one case, and so he was thinking, you know, he's talking about, you know, opening up the markets in states that, you know, don't have a lot of cases right now. Well, 17 days later, Louisiana is close to leading the country in the number of cases, I believe, right? So it's, they're calling it one of the epicenters. So I mean, if other states start to blow up with the number of cases and everything too, like I don't think there's any hope at that point that things open, stir, and if they don't, then the markets just come tumbling back down again if they haven't already. So it's interesting. It's definitely keeping a watchful eye on things.
Yeah, and as our biggest trading partner, I mean, we have to somewhat follow what they do.
Yeah,
Otherwise, we run like an extreme long term risk.
yeah,
I think that, I mean, it is unprecedented times. Things change by the day. Um, what I've seen, I mean, and I don't know if you've seen this, uh, is people. I'm seeing people with like very high business acumen not panic.
yeah,
Like, I've seen some people panic and they're like, hey, like stop everything, we're basically shutting her down, like everything stops, full stop. And like I have other people being like, can you data mine what's happening and what are my competitors are doing, and if they're backing down, I want to double down. and we're
yeah.
like and we're like, yeah, because you might pick up some real cheap business.
Yeah, I agree. I mean, um, uncertain and scary times often bring opportunities to those who are patient and those who are in good positions. So I think that's definitely the case. Um, I'm keeping a watchful eye on things, and I know a lot of other people are as well. I know people who did real well during the last economic turndown. So I'm sure there's going to be a lot of people taking advantage of this one as well.
Yeah, I mean, I had a long discussion about this yesterday, but it's like, you know, ads, like buying ads at times like these, a lot of people stop.
Yeah,
So because ad prices are supply demand based, like that means that ads get cheaper,
right.
and as gets cheaper. So if you just maintain what you're doing, you're actually getting more for your money, and other competitors are stopping what they're doing.
Yeah,
All of a sudden, you're the only game in town.
yeah,
And what's interesting in any downturn is like, either you shrink in terms of like you net shrink, or you stay the same size by acquiring other people's market share in your
Yeah.
industry. There's only
Yeah.
two ways out of this. It's either maintain your size through market share gain or shrink.
Yeah.
Those are your choices.
Yeah.
But there's a big element here of watching what your competitors are doing.
Totally.
One question I had more specifically around mortgages was, um, if somebody's like term is like, say, like a year away from like refi or whatever. I mean, like some people have very low penalties. Like, I mean, I know on one of like our investment properties, um, like our penalty to like do like like to pay out the current term and start a new one is like something like $700 or like
Yep.
$1,100. It's very low.
Yep.
If people are worried about their potential job prospects, etc., in the next like 2, 3, 4 months, and their mortgage is coming up in like, say, like 3, 4 months, is it like a good idea to just bite the bullet, pay that penalty? It might be a couple grand even, right? Because sometimes it's like 3 months, like 3 months interest or whatever it is. Is
Yep.
it worth just biting the bullet, putting that money into like the refi, and restarting the 5-year cycle? Like, because I mean, if you're worried, it might make a lot of sense to do that. I mean, at least in my head, I don't know if like
Yep.
what it makes sense in my head makes actual practical sense.
Yeah, we did a ton of those during that week and a half where we had, super low interest rates. We were doing as many as we can, searching database and contacting clients who paying that penalty made the most sense. Uh, for some of them, made sense to pay that penalty and drop their rate substantially. They make all that penalty back in a very short amount of time and have a low interest rate for a number of years going forward. So for a lot of them, it made sense. We got through as many as we possibly could during that very short window. Rates were literally changing every single day, and so it was just a wild ride. Literally on Saturday morning this last week, I woke up and I was like, I felt like I just got back from Vegas. I was like, what just happened? Like, it was just such a crazy week. But even now that rates are a little bit higher, there's still a lot of those opportunities, especially for those individuals, like you said, who are up for renewal inside the next 12 months, and those who might want to look at um, freeing up cash flow or just changing things around because they are concerned about their job prospects in the next few months. So yeah, definitely worth at least having a conversation and seeing if there's opportunities, because like you said, when your maturity date is very near, the penalty to get out of that is minimal in the grand scheme of things. And so if you can take advantage of rates today, and freeing up that cash flow that you might need, or even taking some of that equity out just to sit on it as a nest egg for the next coming months. You never know if you're going to need it. And, on the other end of this, if you never had to use it, great, put it back on your mortgage. No harm, no foul type thing. So we're having a lot of those conversations right now. And for some people, it makes sense. And we're doing those deals, but for others, it just doesn't, depending on what their situation is. And, we're the first one to tell them that, hey, like, you're in a good position, let's just stay the course right now.
Yeah, and I think that yeah, to your point, it's completely dependent on what their current situation is.
Yeah.
But I mean, for like a lot of people that are kind of maybe not touch and go, but like they're uncertain, to your
Yeah.
point, as long as you get the right kind of mortgage where you can put that principal back in, there's not a whole lot of downside to, doing the refi and then, pull out like some equity. And as long as you can put it back within a year or year and a half,
Yeah.
without like overpaying to get into a penalty for overpaying things down, it's like there's very little risk to you in the great scheme of things for a lot of
Exactly.
peace of mind.
Exactly. And just circling back, like, that is one of the main reasons why we like the variable rate so much, and why so many of our clients are in that variable rate mortgages, because the penalty, as long as you're in a variable rate mortgage, is only 3 months worth of interest to break it at any given time. So you always know exactly what your costs are to get out of it. And so you're always able to look for different opportunities as the market changes, right? Not only does the market change, but life changes. And we know for a fact that roughly 7 out of 10 Canadians actually have to pay a penalty on their mortgage at some point during their mortgage term. Many reasons such as selling and buying a new place, refinancing to access equity to consolidate debt or renovate or invest. Divorce is unfortunately a big one in our country as well. And now you throw in a pandemic, like there's just things that you never see coming, and reasons why you might have to break your mortgage, just things that you never think of. But the reality is 7 out of 10 Canadians do. And so knowing that your cost is only 3 months of interest to do that just gives you so many opportunities throughout the years to take advantage of situations like this when rates drop for a short period of time, or freeing up cash flow when you need to. The flexibility is huge.
Yeah, no, absolutely.
Yeah.
What are you seeing in terms of like volume of questions these days? Like, uh,
Mhm.
are your phones ringing off the hook at this point? Has it calmed down a little bit? Is it you more reaching out to your clients? Like what are you seeing in terms of the mechanics of your industry?
Yeah, the questions definitely pick up during periods like this, and like I said, I'm hearing about these changes from my clients before I even have a chance to get out of bed in the morning sometimes. So it's wild, but we're trying to get as much information out to them as we can, and I think a lot of the information that we send to our clients answers a lot of their questions before they can ask them. But there's still a lot of very general and specific questions that people like to run by us, and we're grateful to be that point of resource that people trust, and so we're happy to answer them. We're not answering them as quickly as we would like to in some cases, but I know people are very respectful and understanding of the times right now. A lot of questions came in about the deferring of payments when that was first announced, and unfortunately we didn't have a ton of information at first. We were told that the banks are going to be deferring payments, but we didn't know who they'd be offering that to, or how it was going to be rolled out, or anything like that. So we're slowly starting to receive a little more information on that. But unfortunately, like that situation like that, the client has to contact their lender directly to find out what options are available to them. So a lot of the times it's just like, yeah, it's an option with your lender, but you got to contact them directly. So there's not a lot of information we can provide there, unfortunately. But yeah, the phone rings off the hook, the emails are nonstop. And like I said, I thought I was going to have a pretty relaxing Friday. And then sure enough, the bank drops the rate a half a point again this morning, like out of nowhere. And so, yeah, another busy day on the phones, but that's okay.
But I mean, I don't know if you know the answer to this because I sure don't. What's the implication if we go to like a zero or less than zero rate, like overnight rate? Like, does that in any way affect like mortgages, variable rate mortgages? Like, what's a practical consideration for like, you know, somebody that isn't a major institution?
Yeah, I'm not entirely sure because I mean, our borrowing rates as mortgage holders would never get to zero or negative, because like the overnight rate was brought down to 0.25% today. But if the banks pass on that full discount, that just brings the prime lending rate down to 2.45, because they have a built-in buffer on their prime lending rate already. So if the actual overnight rate gets to zero or negative, I'm not entirely sure how that's, like, what impact that will have on the economy. I know they have already said that they would like to try to avoid a negative interest rate situation if they can, and they have a lot of other levers that they can pull, and a lot of fiscal stimulus firepower that they have in their pockets if they need to before going that route. But like countries like Japan have been in a negative interest rate situation for over 20 years, I believe, or close to it anyways. So it is a lever or a mechanism that has to occur in other economies. So is it far-fetched to think that it might happen here? I don't think it's too far-fetched, especially right now. But I know that they're trying to avoid it if they can.
Yeah, I mean, it's hard to. There's only so many levers you can pull. It's like
Yeah.
interest rate, print money.
Yeah.
Like, I mean, and we're fresh out of interest rate really at this point
Yeah.
almost. So I mean, it's how much money are they going to print? I guess. Is there anything that you want to touch on or that people should know at this point?
Um, I think the only thing I would say is, I mean, we've touched on kind of the main points that I think people are going to be curious about, but I just think that in times like this, everyone should just kind of stay as calm as they can and don't make any knee jerk decisions or reactions to anything. Also, be very very careful in terms of what you are reading in the news and hearing. Um, do some research, right? If someone tells you, your bank tells you, hey, I should, you should lock in into a fixed rate mortgage. Well, start questioning why, right? And maybe get a couple other opinions. And that's just one example. Anything, any kind of financial recommendations you're receiving, whether it has to do with your interest rate on your mortgage or your investments in the stock market. Just take a breather, get second opinions, and at the very least wait things out, because there is another side to this, and there is light at the end of the tunnel. We will come out of this, and there will be opportunities on the other end of this. So if people can just kind of do what they need to weather this storm for the time being, and I think we're all going to be more than okay on the other side.
Yeah, I mean, like any recession or downturn or whatever you want to call it comes to an end. It's inevitable.
Yeah,
So,
yeah,
things are impermanent that way. So,
yeah,
and the good times generally outweigh the bad.
yeah,
So,
yeah,
this is the thing. And like, I think that, you know, I, I'm very bullish on, um, human ingenuity.
yeah,
Like, for all we know, they could come up with like an antiviral that gives you a little bit of resistance, but not a full vaccine in the next couple of months, and it could be like a non-issue right until a vaccine um, comes out. Right?
yeah,
Like we don't know like the level. In these kinds of serious situations, like this is where we've seen time and time again. Like this is where innovation happens the fastest because we
yeah,
need a solution and we need it now.
yeah,
So
for sure.
I'm optimistic that like a solution will be found faster than we may think it will at this point.
I agree. And you mentioned that people are finding solutions, and that's to in all different aspects. I mean, we have businesses that are finding a number of different solutions right now, and I think the way business is done for a lot of industries is going to change forever after this. The ability for people to work remotely and from home is, for a lot of companies, it used to be no way, no how. Well, now all of a sudden it's like, when you're forced to, well, there's definitely a way and there's a how, and here's how. So I think you're going to see a lot of industries change for the better on the other end of this, which is going to be good for the consumer, and just make business itself more efficient.
Yeah, I mean, we're seeing that already. Like, I mean, questions everybody working from home
Yeah,
that can work from home. It really does beg the question. It's like, do you really need like, if you have 10,000 square feet of office space, do you need 10,000 square feet of office
yeah, yeah,
space, or can you get away with half?
yeah,
Right? It does beg the question. I think also like on the other side, consumer behavior like has changed so much in the last 2 weeks that it's unprecedented. Like
yeah,
how people look at things, why they buy the things that they do, motivations. I mean, even if you compare it back to the last recession, it's not actually like a fair comparison because consumer behavior has fundamentally changed.
yeah,
So we're actually seeing this a lot ourselves because we buy a lot of ad dollars, and we're seeing like the behavior change, and it's incredible. And like I would tell a lot of people that this isn't a business as usual thing. It's not like, hey, like let's put our heads down and wait it out, and then we can just proceed with how things were before. You ask anyone that went through the 2008-9 recession if they could do business as usual after, and the answer is unanimously no.
yeah, yeah,
So I think that this is one of those again, but I think that because it's not like a regular recession where like, just things hit the fan economically, um, I think that the behavior change on this time around is going to be much more pronounced, and how people look at the world is going to be fundamentally changed compared to the recession, 12 years ago.
totally.
So the businesses that adapt to that change are going to be the winners. And the ones that don't adapt to that change are going to be in trouble.
Yeah, I agree. I agree.
So cool. That's about it from my end. I mean, is there anything that you think people should know? Like, I mean, you've probably touched on everything that people want to know.
Mhm.
Is there anything that you think people should know?
Huh. No, no, not off my head. I mean, we've I think we've touched on everything, to be totally honest.
Cool.
Yeah.
Yeah, I mean, we'll just cut it off there. But
Yeah.
yeah, thanks for doing the interview. Really appreciate it. And
Yeah,
we'll
thanks
cut
for
off.
having me. Hopefully it worked out okay. You didn't hear any screaming kids in the background.
Actually, no, it was really good that way.
Good.
So yeah. So I'm assuming, like, on a non-recorded note, because we'll cut it off. Like, there's a lot of them that are like really eyeing down the situation and just taking a calmer head and like, let's visit the facts of the situation. But there's people that are like knee jerk, like cut everything. It's like,
Yeah.
okay, cool.
Mhm.
Like, I mean, honestly, like those are the smaller accounts anyway that are
Yeah.
like knee jerking. Um, the people that definitely have like a more savvy and seasoned team, they're like, yeah, business as usual. Some of the bigger ones and the more, people with like a bit more business acumen that just have like more wisdom are like, let me know if there's an opportunity for me to like bump things up.
Yeah.
um it's like, I want an assessment. Keep an eye on my competitors, or like, are things getting cheaper? Because if they are, I want to saturate the market with my messaging.
Yeah.
And it's like, yeah.
Totally. Smart. Smart.
Yeah. Anyway, I'll let you go do your thing.
Cool.
um Appreciate it. We'll take this, chop it up into clips. We'll send some of it your way, and we'll get this posted, and then you can use it on your social, etc. I think it's like a lot of questions people have anyway at this point,
Totally.
so it'll be like valuable content that way.
Yeah, no, I think it's a great idea. Looking forward to it for sure.